Now, look at this chart. It shows the total losses traders make each day over a month. Day 1 to day 30. And yeah, at first glance, it just looks like another messy market graph. But if you slow down and look closely, something weird starts to pop up. Right here, this spike. And again here, and again. It's like same spot, different weeks. And if we look at the day this spike is taking place in, it's a Monday. And then this one, also Monday, and this one, and this one. This means more money is lost on Mondays than any other day of the week. And it's not just a fluke. This pattern repeats almost every month. Now, here's where it gets even stranger. Let's switch to the gains chart. And guess what? Mondays light up here too, but this time it's a spike in profits. So what's exactly happening here? Why are some traders getting absolutely wrecked every Monday, while others are cashing in like they knew it was coming? Well, they kinda did. And this whole thing is part of a much bigger pattern, known as the Monday effect. Alright, let me show you what it is, why it happens, and how you can stop getting caught in it. Alright, now let me show you something. See this? This was one of my sessions on a Monday. As you can see, I started the day with $88,703.23. The session was less than 10 minutes long. And by the end, my balance was sitting at $92,143.23. All wins. Every single trade landed. Sounds perfect, right? But now, this session was frustrating. See this? Everything was going green, but the entries felt off. It was like my strategy was working, but also fighting against me at the same time. Something wasn't clicking. So I had to step back and really dig into it. I went through the trades, the indicators, the timing, everything. And what I found was pretty interesting. It actually took me 4 Mondays just to understand what was going on, and then another 2 Mondays to finally fix it. That's 6 full weeks of trial and error, just Mondays. So when it comes to my strategy, the adjustments I made were mostly around the MACD and Bollinger Bands. I tweaked the values to better fit the Monday volatility, but I didn't stop there. Now I actually use an extra moving average. It's something I only activate on Mondays. It gives me an extra confirmation layer, like a second opinion before I enter a trade. So if you are trading on a Monday, please don't treat it like any other day. The same strategy won't always work out of the box. So trust me, Mondays require adjustments, and if you don't make them, you are leaving money on the table, or worse, giving it away. Now, for the more experienced traders, have you ever noticed how Mondays just feel weird in the markets? Well, it's not just in your head. As I already mentioned, that's due to the Monday effect. And this thing has been puzzling traders and researchers for decades. It all started back in the 1970s, when this economist named Frank Cross looked at market data and spotted something strange. Stocks were consistently losing value on Mondays. He laid it all out in a paper, and boom, the Monday effect was born. Then came other economists like Kenneth French, who confirmed the same thing with years of S&P data. Mondays were red, while Fridays green. And get this, it wasn't just a random fluke. Small cap stocks were hit the hardest. Some people blamed weekend pessimism, others said bad news will build up over the weekend and hit hard when the market opened again. But as time went on, something weird happened. The Monday effect started to fade. By the end of the 19s, researchers noticed that the pattern had almost disappeared and the market had adapted. faster news cycle, 24/7 media, high-frequency trading, it all kind of smoothed out the old rhythms. Now, does that mean Mondays are totally chill everywhere? Not exactly. In Forex, it's a mixed bag. The market runs almost 24/5, so the old Friday to Monday gap doesn't hit the same. Some traders say Monday liquidity is weird, especially at the Sunday night open. But there's no solid data showing a big Monday crash pattern like in stocks. Then there's crypto. You'd think with 24/7 trading, there'd be no Monday effect, right? But actually, some studies on Bitcoin found that Mondays tend to be a bit more bullish than other days. No one knows exactly why, but maybe people jump in after the weekend once they've had time to think things over. And if you trade binary options, well, there's not much research there yet. But if your asset is tied to stocks or Forex, maybe the old Monday patterns still creep in. So here's the thing. Smart traders, they don't treat Monday like any other day. While most people roll out of bed and hit play on the same strategy they used Friday, smart traders are already 2 steps ahead. Before Monday even starts, they've done 3 things. First, they review the previous Monday. Look at your charts, what moved weird, what indicators lagged, any fake outs or delayed confirmations. I mean, patterns love to repeat, especially on Mondays. The second thing they do is they pre-adjust their strategy. It could be something small, a slightly wider Bollinger Bands, a different MACD setting, or like in my case, even turning on that one moving average you only trust on Mondays. Yeah, you don't wait for the market to hit you in the face. You prepare for its mood in advance. The third thing they do is they cut the noise. You know, Mondays are noisy. It's like the whole market is trying to find its rhythm again. Smart traders, on the other hand, they don't force trades. They wait, observe, and only strike when the setup is perfect. I guess Mondays are like the gym on January 1st. Everyone shows up, not everyone knows what they're doing. So if you're serious about trading, especially with binary options, Forex, or even crypto, start thinking of Mondays as their own beast. Same strategy, different rules. Alright, I hope you liked the video, and remember, start the week strong. Trade smart, not hard.